right, good morning for this Thursday, the 14th of February, so happy Valentine's Day. Let's go through a few charts here. We're going to talk about the Salesforce trade that we are in, the CRM daily chart. If you recall on this trade, we went long at 171.45 as it broke up through this inside bar on the pullback down off this high. Close to the 50 exponential moving average. The market's just been kind of going up a little bit, getting real close to that first target right there where I'm check marking that right here, and that is 174.01. Yesterday's high hit 173.36, created an outside bar, right, an engulfing pattern, took out the high of the prior bar and the low of the prior bar, closing in the top third. Okay, so since we've got that engulfing pattern, what I'm going to go ahead and do is I'm going to move up that initial stop, which was sitting at 168.89, right 20 cents below the low of February 11th, which was 169.09, so 20 cents below that's 168.89. So I'm just going to go ahead and move it up to 169.80. 20 cents below the 170, which is yesterday's low. Okay, so by moving the stop up from 168.89, I go up to 169.80. Let's move that up. So that takes my initial risk from $2.56, right, to $1.65 risk. So I'm gonna move it right here, 169.80, right there. Okay. So that's where we're at on the Salesforce.com trade. Let's move to the next trade. All right, the next trade is Tiffany's, TIF. Our first objective, as you know, is 64.08, right up here. Let's see, 64.08. Got close to it yesterday. Made a new high. Higher high and a higher low from the prior bar. Okay, close kind of mid-range. Okay, so what I'm going to go ahead and do, remember it's all about trade management. Okay, I'm going to go ahead and move it up to below of the low of February 11th. That low is 62.67. Okay, all right, what did I say? Let's see. Remember, I'm long at 63.10 as it broke up through the high of this inside pattern here. 63.10, looking at 64.08 as first objective. Okay, but now, like I said, I'm going to move my stop up to below the 11th low. That low is 62.67. So, you know, a stock just above $50, $60, I use 10 cents above or below highs or lows. So I'm going to go 10 cents below 62.67 to 62.57. Okay, 62. Give it a little room. Okay, today might be a down day. It's market's going to open up very shortly here, and it looks like the market's going to open. General market's going to open up lower today. So again, let's see if it brings this market down along with CRM a little bit. Okay, we'll see just shortly here. It's going to open up in about 30 seconds. We'll see. But I'm going to move that stop up to below 62.67 to 62.57. So now my risk on this particular trade is simply 53 cents. So not risking a whole lot on this trade. All right, general market just opened up, and let's just go to, okay. So, all right, look at this, 63.01. So it opened up 45 cents lower. Do you see it open up right here? 63.01 right now. CRM opened up at 172.50. All right, so I've got a sell stop at 62.57 right down here. Okay, so that's where we're at there. Now I want to show you, what do I want to show you here? I want to show you Amazon. Okay, I was going to point this out yesterday, but we've got enough trades going on already. This was a beautiful trade setup. Let me show it to you right now. Take a look at this. This is absolutely textbook. Okay, obviously this is Amazon, right? Trend was up. I mean, look at this pattern right here. Inside pattern, took out the high, market ran a lot higher, right? Market ran up, made a new high, obviously took out this high. So now we're looking for a pullback in a price pattern. Look at this pattern that we saw. Look at that inside pattern. Right back at those averages, right? The 50 exponential, the hot pink line right here. We have a tight little inside vertical bar occurring in the bottom half of the prior bar here. So this was the play. This was the play. Looking to buy the market as it took out the high of yesterday, the 12th high, right? The 12th high was 260.16. Obviously over $100. I used 20 cents penetration. So my entry was 260.36. Now, as you see yesterday, the market gapped over that. Obviously, I'm not going to have a buy stop before the market opens if I see that the market's going to open up below, above that level, right? Or if I'm looking to go short, the market gaps below it. I'm not looking to go short on the open if it gaps below it. I need to see the market trade through it. So this is what I did. Actually, yesterday was textbook, okay, how it actually set up. So this is how I do it. So please pay close attention to what I do when I get a gap on a trade like this. So look at market took out the high on the open, right? It opened up right here. Opened up like 261.60. So it opened up actually a 1.5 above where I wanted to get long. So when I get something like that, what I do, I then place a limit order to go long where I'm looking to go long, right? 20 cents above yesterday, the 12th high was 260.16, so 20 cents above, it's 260.36, okay? Market opened up the next day at 261.53. So as soon as I saw it open, I threw in a buy limit to buy Amazon at 260.36. The market came down, got me long. Well, I mean, this is just, I wish this happened every day, right? The market pulled down to 260.30, got me filled at 260.36, and rallied the rest of the day. Okay, it was a beautiful. Now, this was actually, I wasn't meaning necessarily for this to be a day trade, but it happened to be a day trade, okay? Let me outline this for you. So the market gapped higher. I threw in my buy limit at $260.36, $260.36, okay? That was a buy limit. At the same time, I threw in a sell stop at 256.40, okay? 256.40 was 20 cents below the prior bar's low, right? February 11th low. That low was 256.60, 20 cents below. It's 256.40. So my initial risk was $3.96 on this trade, okay? Now my profit target was twice what I was risking. I was risking $3.96. Here, let me write some of this down. So again, I went long, right? I'm lucky that the market pulled back and got me long. If the market opened up higher and continued moving higher and never pulled down to the 260.36, I would have never been long. But I was lucky the market pulled down, got me long at 260.36. So I went long by at 260.36 with an initial stop loss, ISL equals 256.40. Okay, I was risking $3.96. That was my risk on this trade. So my profit target was twice that, times 2. That's $7.92. Okay? I was risking $3.96 to make $7.92. So if you add $7.92 to my entry of 260.36, that puts me at a price of 268.28. 268.28. Look at where the market ran up to. Boom, 269.96. Close at 269.47. Right now it's trading at 267.62. Beautiful, beautiful trade. So that was a 2-to-1 risk to reward. I definitely wish I had pointed this out to you yesterday, but again, since we've got the Tiffany's trade going on, we've got the Salesforce.com going on, we were looking at CL, right? We were looking at Colgate-Palmolive, which, by the way, has not done anything yet. Even though it's setting up beautifully, still, you've got to be patient. I was looking to buy it if the market was able to come back up to take out that high yesterday. Never happened, right? Now look at today. Look at today. So far, now the market's only been open for 6 minutes, but so far we've got a lower high and a higher low from yesterday's price range, right? So I'm still looking at this. This is still on my watch list. I'm really hoping that today is a compressed inside bar, because then tomorrow I would look to buy if the market's able to take out today's high. So I go again. I apologize. Today is a relatively long video, but I really wanted to give you a lot of good content, educational content here to teach you just a fraction of what I do. This is just not even a tenth of what I look at, but I just want to give you a flavor for how I do things. So again, Colgate Palmolive CL is still on my watch list. We are long, obviously, TIF Tiffany's. Okay, market's trading up a little, 63.28. CRM again unchanged, 72.34. Amazon was a great trade yesterday, and we'll see what happens. Have a profitable day. And today, look for your inbox. Where Doc, Dave, and myself are sending you an email for the second video in the video series that we've been doing. Okay, so just go to tradingconceptsinc.com, push like on the stock program or whatever, and it'll take you automatically to that video. Okay, I'm not exactly sure what that link is. It's a relatively long link, but you'll see it. If you go to the main website, Trading Concepts Inc., and at the very top you'll see like an orange bar that talks about the of this video. So just click on it and watch it. Hope you like it. If you've got any questions, let me know. Have a great day. Bye for now.